Right, we are going to commence the section 3 of your examination paper. Now we have already done the MCQ question section 1 and short scenario question for about 40 marks in your examination. This is the long cases. There are two long cases into the 20 into 2. So now what the most important message that I want to give is that, so question number 6 and 7 is contain very large quantity of information. The 2 pages of the information. So in the examination you will really get stressful, or you will get really fed up and looking at the quantity of information. Right, because 2 pages you have to read and how to understand. But keep one confidence with you, if the question is very large, question is not difficult. There are a lot of information which are not relevant for the exam question or the required part given. Lot of informations are background information to understand the auditing case. In my assessment of this paper, of difficult paper of CL1 December 2021, the most easiest question is question number 6 and 7. Question number 2 and 3, those short scenarios, MCQs are difficult. But most of the students look at these 2 questions as a headache. So very large cases, how can I do that? What is most important is, before going to the examination, write this type of 10 questions by yourself. There are so many past paper questions, there are so many revision kit questions, so many study text questions. Please do that. When you do 10 questions, automatically your confidence will go up and you will create an interest to do this question. You will have a real need to do this question, and you will be enjoying in finding the logics behind of the stories, and come to that level. Please, if you come to that level, there is no challenge at all. There is no challenge at all. So these 2 cases are going to be the most interesting and easiest question in your auditing paper. Please do that. If you don't do that, these 2 questions are going to be headed. Right? And actually, when I do this question, or before I discuss this paper with you all, so I did this exam paper in myself, and when I was doing, and I enjoyed the question, because there are so many scenarios given and how to link into the case scenario, and this is that art of writing, we call art of writing, has to be taken by you. Please understand what I am trying to say. Art of writing, if you get into your body, inside of your mind, with the interest for this beautiful subject of auditing, these questions are not going to be difficult, right? So they are not going to be difficult, and these are going to be easiest question, and you can definitely get through the examination, right? Okay, so now we will look at the required part plus question number 6. There are large information, there are large quantity of information plus 1. The required part, there are 4 sections basically. Yes, 4 sections are there. So first look at the required section. So what are the steps? You need to read the 3 times this required section, highlight the action verb, the number of marks, and identify and see with the theory or practical question, and just go and do the scanning reading of the case if you have a time. If you don't have a time, go into the detailed reading. But whenever you are reading the long case, you need to understand that you are reading that case scenario to answer sometime maybe selective 1 or 2 question, not to answer all the question that cannot be concentrated by you. Right, part 1, it says that recognize 2 possible fraud risk factors and red flag for 4 marks. Recognize 2 possible fraud risk factors and the fraud red flag. So this has been discussed on SLA US 240 very clearly, what are the fraud risk factors and the red flag, and then outline 4 audit procedures that need to be performed by the audit team to verify that the inventory report has been appropriately adjusted with the inventory count records for 4 marks. A practical scenario from the auditing inventory, which is given in SLA US 501 auditing inventory. Then assess audit implication arising from the gene stock. Recognize that the cost of statement of the financial position, for that is for 6 marks, a purely a practical case which is given from the case scenario. Assess audit implication arising. Audit implication, not the report that has to be identified, not the report implication, but it is asking audit implication from the gene stock recognized at the cost of statement of financial position as of 31st March 2021. In respect to the matter described in C above, demonstrate is the action verb for a 6 mark. Demonstrate with reasons the implication for the auditor's report. Implication to the auditor's report. Here implication arising from the audit. Implication to the auditor's report on PSL finance statement for the year ended 31st March 2021. So basically, if you look at this in this particular case scenario, so information is given to identify the fraud risk factors, red flag, and outline the audit procedures that you can think and write. Part C and D, you have to read the specific information given in the case with regard to the gene stock, right? So that's how the examination question has come. This is not a difficult question. It's not a difficult, and if you have a real interest, actually, this is one of the easiest. Let's do that. Okay. So now, I'm going to the focus. Now, when I'm going to read the question, I can't answer all the questions. I will focus the part A. I'll read the question to focus in the part A, but gathering the information for part B and C, D as well. But main focus will go to the part A of the examination question, right? So let's go into the now. Right. So fraud risk factors and the fraud red flag. So what is fraud risk factors and the red flag? What is fraud risk factors and the red flag mean? Right. When okay. So when management of the company, they prepare the finance statement and give it to the shareholders. The shareholders do not trust the management. Accordingly, shareholder comes and appoint a third party person called auditor or chartered accountant to come and check this finance statement and give a report. Right? In giving this report, this auditor has to carry out the audit as per Sri Lanka auditing standards. Right? While carrying out the auditing standards, so auditor has to look at the fraud. Auditor has to look at the fraud. In looking at the fraud, so one of the thing that we have to do, two things is fraud risk factors has to be looked at by the auditor, as well as fraud red flags has to be seen by the auditor. Now, what is meant by fraud risk factors? If you can remember, the fraud risk factors mean why people engage in the fraudulent activities. If there is a money, if there is a 5,000 note on the road, why a person takes that 5,000 note? Why he takes that 5,000 note? There are three reasons as to why people in this world engage in the fraudulent activities. We call fraud triangle, if you can remember, we call fraud triangle. So one of the fraud triangle, there are three factors. One is opportunity. Opportunity. Other one is pressure or incentive. Pressure, incentive, and the rationalization. Rationalization, right? So these are the three reasons as to why people engage in the fraudulent activities. There should be a pressure, there should be opportunity, there should be a justification or attitude to rationalization people to engage in the fraudulent activities. So I hope that you have already learned the theory. So that is fraud risk factors. Now the important thing is now to understand what is fraud red flag. The red flag and what is the difference between the fraud risk factors and the red flag. The red flag means something wrong at this moment. Something wrong, something is taking place in the company. It's a clear-cut indication that there would be a fraud. There would be a fraud. So the risk factor is a fraud risk factor is a broader concept. Fraud risk factor is a broader concept. But red flag is a very narrative and very specific scenario at this moment, something wrong. This is a difference between these two. And your study text very clearly given the fraud risk factors which are relevant to the fraudulent financial reporting as well as misappropriation of asset. There is a list given, right? There is a list given. So that I believe that you can remember. And fraud risk factors also, there are a lot of examples given in the study text and the SLA US 240, the particular standard as well. Now, so having understood this one, now we are going to just read the examination question to see whether what are the fraud risk factors out of this fraud triangle can be seen, and what are the red flag which are given in the study text. So I told you in the webinars, the red flag, it's very difficult for you to identify, very difficult this for you to segregate. What really matters is to just to remember the red flag checklist. Fraud risk factors you can think and write, but the red flag checklist better to be remembered than easy for you to identify at the examination. Right. So let's go into the question. Right, we'll read that. So you are an audit manager at Tita & Co., a firm of chartered accountants. You have been assigned the engagement manager role for the statutory audit of Pink Suits Limited for the year ended 31st March 2021. So that is, so we are in the audit of, so you need to understand we are the audit of Pink Suits Limited is the company. Financial year ending 31st March 2021. Financial year is so crucial, highlight it, and the company name also important. Is engaged in the manufacturing and exporting in apparels. They are in the business nature. You have to live in the question, especially when it comes to long case scenarios. You have to live in this question. You have to absorb into the question. You have to come into this question. So from looking at the nature of the business, you have to imagine that you are auditing an apparel industry. You are auditing a garment factory. So like maybe Brandex or Mass Holding, just imagine that you are auditing such a company. That will help you to live in this question for a given during that 45 minutes at the examination time line allocated for this exam question. Apparel and has 15 factories operating across the western and Sabaragamuwa provinces. So that's the nature of the business is clear. Year ending is 31st March 2021. I am auditing a garment factory. So your team is finalizing the audit of the finance statement for the financial year ended 31st March 2021 in November 2021. So that the 8th month after, so your audit is finalized after 8 months from the financial year. You have been reviewing the working papers prepared by your team, and you have noted the following matters from the review of audit working papers. Right. PSL is owned by a group of net worth families who started the PSL as a family business. However, as the business expanded, the family members became investors and hired a dynamic team of professional managers from outside the family to manage PSL. Whenever you are reading the large cases, always remember, sometimes there are a lot of additional information given which may not be relevant for the case. So therefore, you have to just read the paragraph by paragraph and stop from there. One paragraph and stop and see whether is there any fraud risk factor or red flag for you to take it out here. Looks like no. Right, we'll go to the next page. Alright, next page. Second one. The quota system which supported much of the international trade in apparel expired in 2005. You know, GSP Plus. To overcome the impact from the preferred scheme was the biggest challenge faced by PSL and other apparel companies operating in Sri Lanka. So that is a challenge. So however, PSL experienced a rapid growth in its exports, stating in late 2010 due to product innovation pioneered by the management. The market for apparel and textile is very competitive with several companies in the region striving for the market share. This in turn had resulted in downward pressure. It has become a downward pressure on profit margin of PSL. Now looks like in this paragraph also I can't see a fraud risk factor. This paragraph also I can't see a significant fraud risk factor, but there is a word called pressure. So whether can I take that pressure as a fraud risk factor? Because pressure is a fraud risk factor. Let's see. While revenue continued to grow, profit of PSL are showing sign of declining over the past years. So there is a revenue continued to grow, profit of PSL are coming down. So that is not a fraud risk factor. To remain competitive, PSL has significantly increased their innovation strategies by investing in state-of-the-art production technologies. However, funding for these new technologies has been a challenge for PSL, and it is currently negotiating with the banks to obtain long-term loan to fund the next round of investment in technology. There is a funding requirement, there is a funding issue. I can't see a significant fraud risk factor there. Now, the managing director of PSL is closely involved in running the day-to-day operation and chairs the executive committee. The managing director is running the executive committee exco of management. As such, he dominates the decision made by the management team. So he is the chair of executive committee, that is okay, but he dominates the decision made by the management team. Though the exco activities, through the exco activities, the MD applies significant pressure on the management team to achieve the revenue and profit targets. Managing director is a highly dominating person. He is having a dominating personality. So now if your organization, you are head of the organization is having a dominating attributes. So that means others should do what he thinks only. So that means, so it creates a dominating personality, creating an opportunity the person to engage in the fraudulent activities and creating an environment for a leader to do whatever he thinks fraudulent activities. The second one, he gives a pressure on the management on the revenue and profit target. You achieve the 10% of the revenue increase, you achieve the 20% of the profit. So the pressure is given to the exco team by the managing director. So that is also a fraud risk factor number 2. FRA fraud risk factor number 2, it's giving a pressure. Right, it's giving a pressure. Here also it's giving opportunity, there it is given a pressure. Right. So now we will just note it down these things in a sheet, then easy for us to right. So now we get into the fraud risk factors. Right, fraud risk factors is one side, another one is a red flag. Red flags. So the number 1 we can see is managing director, right? He is a dominating person. Right? It is a dominating person. He is coming under the opportunity. And the second one, right, pressure to achieve targets. That can be considered as a fraud risk factors. So we'll go to the next one now, right. Then it says the next paragraph, the spread of COVID-19 through the second wave in October 2020 had led to an outbreak within factories of PSL. As a result, PSL faced disruption to its operation and was unable to fulfill orders on time. Meanwhile, PSL competitors in Bangladesh and India had returned to more stable operation during this period. As such, some of the long-standing customers of PSL had moved their orders to those factories in Bangladesh and India. I can't see a significant risk. Despite these challenges, as per the draft finance statement for the year ended 31st March 2021, PSL had achieved, see that, PSL had achieved the budgeted revenue and profit target for the year. Despite these challenges, as per the draft finance statement for the year ended 31st March 2021, PSL had achieved the budgeted revenue and profit target for the year. Despite all this COVID-19, despite all the competitiveness coming from the region, and irrespective of all these factors, but the company has achieved the target revenue. If the company has achieved the target revenue irrespective of all these factors, how it was achieved is a significant question mark, right? So It's a very clear-cut fraud red flag fraud red flag. Why? It is given in the SLS 240 of the study text also. If a company achieve the target versus actual revenue, when there is a lot of difficulties, it is a fraud red flag, right? It's a clear-cut indication that they would have achieved this target by manipulating the finance statement, maybe through window dressing or maybe through other fraudulent financial reporting strategies that the accountants know, right? Therefore, so this is a fraud red flag, which basically coming into the, this is a fraud red flag. So this is that target revenue versus actual revenue. Target revenue versus actual revenue is, so actual revenue is achieved into the target revenue under the different circumstances, under the difficult circumstances, is a questionable mark. It doesn't mean that is wrong, but it's a red flag, that it's a red alarm, like something wrong or something is taking at this moment in the company in manipulating the financial results. Right, then right, next one. So then the next one. During a meeting with MD, he explained the reason for meeting profit targets. As explained by him, the management has identified several measures to reduce operating costs, including the laying off head office employees, implementing pay cuts and other streamlining the supply chain. The EXCO team members are entitled to an annual performance incentive. The EXCO members are entitled to an annual performance incentive. So there is a pressure given by managing director to achieve this one. In the meantime, there is an incentive. There is an incentive for the EXCO team members to achieve this profit target. So that means, so if you go to the, again onto our list. So incentive to EXCO team is going to be the fraud risk factor. It is coming under the pressure incentive bucket, right? So now that is what we have discussed up to now. We'll read the remaining story as well, to see that what it is. So inventory is a significant account balance in the balance sheet and is a complex area to audit. Inventory mainly comprised of main raw materials, fabric, work in progress and finished garment. A physical inventory count of PSL was carried out on 31st March 2021, covering all locations. The inventory counts were performed at all factory locations where the audit teams physically counted a sample of inventory. The audit procedures performed at the inventory count indicated that a branded denim jean stock of 50,000 items has not moved since December 2020. The average day in stock for finished goods is 30 days and the design of the apparel need to reach to the retail market as required by the brands. We'll read carefully this one. Inventory is a significant account balance. Inventory is a significant account balance in the balance sheet and the complex area to audit. It's obvious. Inventory is a complex, especially in the garment industry. Inventory mainly comprise the main raw material, fabric and work in progress. There are three things: raw material, fabric and work in progress, and finished garments and finished garment. There are three. There is another item. A physical inventory count of PSL was carried out on 31st March 2021, covering all locations. The inventory counts were performed at all factory locations where the audit team physically counted. Auditor also attended for that particular inventory counting. The audit procedures performed at the inventory count indicated that the branded denim jean stock 50,000 items has not moved since last December 2020. Stock has not been moved. We call slow moving or a non-moving stock. The average dates in the stock for finished products are 30 days. Generally, that particular stock must move within 30 days, but now December, we are in December, but the stock verification is done in March. For 3 months, it has not moved. And the design of the apparel need to reach the retail markets required by the brand. So that design can only go for the particular the brand, and it cannot go for anywhere, right. If you just try to figure out, and if you just note down this issue, so because this will be important. Now inventory, so we have inventory issue. So what has happened is, this company name is so this is Pink Suits Limited, PSL. So now right, PSL. So now this is the PSL company, right. So they have the inventory, right. The inventory, there are so many items, raw material, and they have a work in progress, and they have finished good, right. And auditor also here, right. So when this particular stocks were counted on 31/3/2021, if I am not mistaken, that is 2021, yes, right, 31st March 2021. Now what has happened, this particular stocks audit also has taken place to observe the stock on 31st March 2021, and when he observed the stock, he has noticed that certain stocks of 50,000 of quantity of gene stock is not moving, slow moving stocks. When the auditor is also attending to the physical verification, that is mandatory. There is a certain 50,000 quantity of the gene stock, so which are not moving, because general average 30 days is the stock keeping time, but it has not moved. This is a slow moving inventory. Ideally, when any inventory is there, so inventory, value of inventory, either it has to be a cost or NRV, whichever is lower has to be accounted in the financial statement. When such a stock is not moving, so you understand that, so there is a reason, we must investigate and see whether cost or NRV, whichever is lower, has been adopted as given in LKS 2. Right, we will go to the scenario again. Right, scenario, we press paragraph, we read it, the second paragraph. The stores manager informed that the customer had rejected the whole order based on the quality failure. A sample of finished item from the gene stock had been sent to the customer during the month of November. So the sample has been given to the customer at the time of those were being manufactured. And when it is product, as per the claim made by the customer, PSL had manufactured the gene stock using substandard sub-brick. The audit team had obtained and examined the written communication. You have a written communication from the customer confirming the rejection. The customer has confirmed, that is, I have rejected because of the quality issue. Now, read the next paragraph. The general manager, sales and marketing explained that the PSL is prohibited to sell rejected goods on any other party, as the gene stock contain a customer brand. PSL is contractually bound to destroy the rejected stock within a month from the date the rejection. So that means, that stocks cannot be sold to anyone. So that will have to be destroyed. That is a mandatory requirement, because their brand includes. And as per the inventory valuation report as of 31st March 2021, the gene stock is reflected at cost of rupees 90 million. Now, if the cost is around 90 million, so this cost is around, now it's coming into the cost is 90 million, right, 90 million. Now we have to decide what the NRV looks like. looks like NRV is 0 because this particular stocks cannot be used for any other perspective. This must be destroyed. NRV seems to be 0. But what the managing director says, during the audit conclusion meeting, prior to the sign off, the finance director of PSL argued that no adjustment would be required in respect of the Jane stock as the stock existed at the warehouse at the year end of the date, and the actual cost of this has been incurred and recorded in the inventory and the general ledger. So the finance director believes that the Jane stock can be redesigned as a different product for the same customer, even though there had been no such instances in the past where the product had been redesigned and no redesign activity had commenced even by November 2021, they have not done. What the managing director, finance director, what he says that, yes, there is a 90 million worth of stock at the year end, which we have incurred the cost, but the customer has rejected. Then auditor may ask, what is NRV, net realizable value? So the finance director says that even though this particular stock should be destroyed as per the contract signed with the customer, but we are thinking of doing this particular product, so we are thinking of redesigning with the next step that is yet to come, that is going to come from the customer. So therefore we have to keep this on this particular cost. So redesigning has to be done, but even after 8 months from the financial year, even after 8 months, this has not been done. Now it's where there is a very clear cut indication that this is going to be nil. This is going to be nil, right? Because, and also can understand when the operational people, production manager and the customer also has confirmed to the auditor, when there is other factors are there, other collaborative evidences are there to get and comfort to the auditor that the NRV seems to be 0. But the finance director wants to keep this inventory 90 million on the finance statement. They want to keep it that. He wants to keep that one. When actually such a value is not there for a stock of 90 million, finance director wants to keep it that. Mean he wants to manipulate the finance statement. He wants to increase the gross profit by 90 million. He wants to increase the asset by 90 million. He wants to increase the profit by 90 million, net profit. So that means it's a very clear cut window dressing example. Manipulating the last moment the finance statement which are presented to the shareholders. Window dressing. Can you remember window dressing? Window dressing mean, now in a waterfall like දිය බුබුලක් වගේ කියන්නේ අපි උඩ ඉඳන් waterfall එකකින් වතුර වැටෙනකොට වතුර පාර ලොකුවට විහිදෙනවා වගේ. So you are trying to manipulate the finance statement by showing which is not the real case, right? So therefore this is a unrealistic situation and this is not correct. So therefore you can come to a conclusion that there is a window dressing scenario. Window dressing scenario generally is treated as a red flag, right? Window dressing scenario, or we can say inventory overstatement. Right, inventory overstatement. Right, so this is the red flag and this is the fraudulent. This is the red flag and this is the fraud risk factors, and these are the answers in the examination question also. There are 3 and there are 2, and those are the things that are expected by the examiner to identify as a fraud risk factors and fraud red flag. But remember, identifying these 2 are very challenging to you. Now these 3 of course easily you would have identified and 2 marks you would have taken easily, but this 2 marks is really challenging in this exam, really challenging, I know, but it depends on how far you have practiced the examination question. So if you have done the 2018 KB for past papers question number 6, similar type of case is there for a large case. And in the meantime, there are another 2 or 3 past papers of the KB4 on these fraud risk factors. And then it comes to CL1, there are 1 or 2 questions, even at the pilot paper question number 6 part A, also fraud risk factors. Likewise, if you look at and if you do all these questions, this question would have not been difficult. Otherwise, this would have been a very difficult question to you, right? But I am giving you a shortcut method and how to think of this fraud risk factors question. So very difficult to segregate this from your end by thinking. Now, being a partner of an audit firm, I will be able to do because through the practice, but you can't do it. So what you can do is, you can do the fraud risk factor identification can be done. What you can do is, a red flag you can remember. What is checklist given in the standard, given in the study text, you can remember, and then if you notice those checklist items in the case scenario given, you can write the red flag, but fraud risk factors you can develop, you can think and write. Right, that is the answer for part A. I am not going to read the part A answer. If you see that question number 6 part A. Yes, you can see this one, part A answer. Domination of the management by a single person and excessive pressure on the management to meet financial target, top management compensation linked to the profit of the company, and the fraud red flag, window dressing of the finance statement by way of inflating closing inventory and understating the cost of sale, achieving the planned revenue targets. Right, that is, so these are the answers. Right, we will go to the next question, part B. Part B. Part B, it says that, so outline 4 audit procedures that need to be performed by the audit team to verify the inventory report has been appropriately adjusted with the final inventory counts records. Read again. Outline 4 audit procedures that need to be performed by the audit team to verify that the audit inventory report, right, has been appropriately adjusted with the inventory count records. What is that too? Inventory report and inventory count sheets. What is that? So basically, now when this year end stock count is taken, right, by 31st March 2021, when the inventory count was taken, those are inventory count is recorded in a sheets we call count sheets. We call count sheets. So generally in the count sheets you can see only the quantity. If you look at the Food City inventory count, you can see the sunlight, you can see the lifebuoy, you can see some item quantity, 10 sunlights. Right? And depending on this count sheets, management will prepare the inventory report. Inventory report. Right. Inventory report inclusive quantity into rate equal value. Quantity into rate equal value is included in the inventory report. Now this examination question is asking outline 4 audit procedures that need to be performed by the audit team to verify inventory report has been appropriately adjusted with the final inventory count sheets. That means whether inventory report what is reflected in the quantity into rate should be the quantity that you marked at the inventory physical verification. That is the question. When you perform the counting, you have noted some number of quantities are there. that quantity should be in the final valuation report called this is called follow up action. This is very clearly there in the study text as well. So quantity, this quantity and this quantity should be equal, because this is done on, this counting sheets done on 31st March exactly on date, but the valuation is done after some time, because after collecting those count sheets and the valuation is prepared, and after that those now auditor is going to verify that in after 8 months of the period. Now you have attended to the physical verification at the year end, but you are going to finalize your audit after 8 months of the period. At that time, to ensure that this quantity and this quantity is equal, what the procedures that you need to do, that you can think and write, or otherwise it is a straightforward given in the study text under the inventory as a follow-up actions. So what can be done now to ensure this quantity and this quantity equal? So what are the procedures that you can do? You can think and write. So you can inspect, you can take these counting sheets and cross-check with the final inventory report whether the counting quantity has properly been taken. That can be done, right? And another thing, another thing that the auditor can do is this: while the stock verification was taking place, auditor might have done the test count. You might have learned that. The test count item that you verify, now stock verification is done by the management and you are just observing, but sample basis you also do a count, that is called test count. The test count what you involve, you can go and see whether those quantities are properly taken there. You can just take the stock count sheet and cross check with the inventory report, that is another thing. And also, and it's a double confirm that, so you might have done a count of a sample basis test count, that item quantity whether it is taken properly to the inventory report, that also can be reviewed by the auditor, right? And the third thing, especially like cutoff of inventory, right? So the cutoff of inventory, in order to ensure the inventory report quantity is correct, the follow-up action, the cutoff has to be ensured by verifying the last transaction of this particular financial year and the beginning of the next year, or maybe the source records like GR and GDN. So by verifying those documents, the cutoff procedure has to be done, performed properly. And sometimes third party stocks, if there are any third party stocks, so auditor would have requested the third party stock confirmation, those replies can be reviewed. Likewise, there are few procedures that the auditor can do as a follow-up action at the time of this inventory report is prepared and inventory report is audited along with the counting sheet. Actually, these are very clearly given in the study text also. I will just show you that the study text, if you go to the study text volume number 1, so this is we are on control environment. So let's go into the inventory chapter, auditing inventory. We'll come to the physical verification of inventory. So you can, this under the audit procedures, this is very clearly given. Audit procedures at the inventory count, and those procedures also there, and inventory count further details are there, and inventory procedures, perpetual inventory count also there, plan attendance during the stock verification, what you have to do before attending, and attendance at the inventory count, those are very clearly given in the study text. After the inventory count, this is the one. After the inventory count, what you want to do. So after the inventory count, this is on the page number. This is on the page number 292. After the inventory count. So read this one. So after the count, the auditor should check the final inventory sheets. Final inventory sheets have been properly compliant from count records, and that book inventory has been appropriately adjusted. After the count, the matters recorded in the auditor's working papers at the time of the count or measurement should be followed up, and key tests include the following. These are the tests. Trace items that were test counted, which I told you, and observe whether all count records have been included in the inventory sheets. That has to be seen. Right. Inspect final inventory sheets to ensure they are supported by the count records. Ensure that the continuous inventory records have been adjusted to the, now for example, let's say if there is a, now in the inventory report say 10 sunlight, but when you compute 9, there is a 1 is missing. That has to be adjusted in the final inventory valuation report. Sometimes certain companies I have noticed, they do the inventory counting, but the counting differences are not adjusted in the inventory system, inventory report. That is common mistake in most of the companies that happens. And then confirm cutoff and review receipt from the third parties, review replies from the third parties from inventory held for them, confirm the client final valuation and follow up the queries and notify the problem. Actually, so this obviously this one you can think and write, trace item test count also you can think and write, and this also you can think and write. Right, because if there is a difference that must be adjusted, all count should be cross checked with that, and test items can be seen. Those are answers that can be written, but these are, remember, most of your examination questions from your CL1 advanced audit and assurance from the study text, not from 100% from the study text, but the problem is it's not the just application of the study text, it's a case specific application. So therefore you have to have the practicing, you should practice the question as much as possible. Then from the questions you can come back and see the study text. Right. So we'll go to that is the answer actually. If you just see the answer even, given the same thing, if you just see the answer for part B, same thing. Right, same thing is given on what is given in the study text, so I am not going to read it out. Right. So part C of your answer, assess audit implication arising from the gene stock recognized at the cost in the statement of financial position as at 31st March 2021 for 6 marks. Your answer should be sufficient to get the 6 marks allocated at the examination. So audit implication, it is an audit implication. So what is happening here? Audit implication. Now the cost to NRV, whichever is lower, has to be accounted. So final summary of issue identified is what? There is a non-moving stock. So their cost is 90 million. Our material level, overall material level of the company is 15 million. Right. So 90 million. NRV of the company looks like 0. Right. Now the implication for the audit. Audit implication for the audit. What are the implication? The first of all, this is a misstatement. That we need to understand, which is a non-compliance of LKS 2, that we have to first of all agree with that. And the second thing, this is not just a misstatement, it is a manipulated misstatement or a fraudulent financial reporting misstatement. So therefore this can be treated as a window dressing. window dressing, fraudulent financial reporting scenario. This is, you can't just leave it out, just stating that this is a misstatement. Yes, obviously there is a misstatement. That misstatement you have to see that how it happens. This misstatement is happening through the window dressing, fraudulent financial reporting. So because of this is a window dressing, there is a two significant factors to be looked at by the auditor. What is? So integrity of the management. Integrity of the management is questionable because we don't know whether they are intentionally trying to manipulate the finance statement mean. That is one of the areas that you identify. There could be certain other areas as well. So therefore integrity of the management is questionable and auditor will have to reassess the fraud risk. Auditor will have to reassess the fraud risk now because sometime this is only a one-off incident. This is only a one student incident. There can be so many incidents like this. So when you talk about the audit implication, you need to understand this is a clear-cut misstatement. This is an error, not error. This is a fraud, and which is not in line with LKS 2, and it is a material issue because of the 90 million. And also this is a fraudulent financial reporting item, that is a window dressing. When you look at a window dressing, your fraud risk assessment will have to be revisited because there can be similar incident like that. And also management integrity of those charged with governance, because finance director only tells like that. Finance director mean part of the board of directors. Those charged with governance, top of the company is questionable and top of the company's integrity is questionable. So therefore when you talk about the audit implications, all these will have to be, you will have to write, not only just, if you just write only a misstatement, you will get only 2 marks, and others 4 marks if you want to get, you have to elaborate this audit implication into the level that I explained now. Right, if you just see the answer, right, just read this one. The LKS 2 inventories require that inventories are measured at the lower of cost or net realizable value. If the gene stock cannot be sold, the net realizable value is 0, so the gene stock should be written off completely. The adjustment to write off the gene stock would reduce assets and gross profit by 90 million. It is apparent that the PSL management has applied a window dressing of the finance statement in order to inflate the closing stock and understate the cost of sale and thereby increase profit. Therefore, the integrity of the management is questionable and the auditor should consider the risk arising from fraud in the finance statement of PSL and the appropriate responses to be made. So that explanation is needed to get a 6 marks. I will tell again, if you want to get the entire 6 marks, so you have to write into this, elaborating into the 3 situation, then only you will get the 6 mark, otherwise you will get maximum 2 or 2.5 marks. And also this is an indication that when there is a question like this, and to assess and 6 mark, if you just write the misstatement, it is not sufficient, right? You should realize that I am forced to think beyond the answer that comes to my mind. You are forced to think. It's because a number of marks allocated also are important to figure out up to what extent you should go, or up to what extent in depth you should go. That will depend. Right. Now we are coming to the last one, section D. So in respect of the matter described in C above, demonstrate with reasons the implication the auditor's report on PSL for the financial year ended financial year 31st March 2021. What is the implication of the audit report? So I will write here itself, implication to the audit. Right, implication to the audit. So when you look at the implication to the audit, right, so in this issue, implication to the audit report, if you look at the implication to the audit report, So this is first of all we need to understand. Can you explain in my audit reporting webinars? I explain you a 5-step model how to logically develop audit reporting question. Number one, you need to see that. Number one, you have to see that whether this is a misstatement or a scope limitation. This is obviously a misstatement. This is a misstatement, right? Then you have to see if it is why it's becoming a misstatement. It is a clear-cut violation of LKS 2. Cost of NRO, whichever is lower, has to be accounted. They have not done. It is a misstatement. It's a disagreement between the management. Misstatement. And now we have to see whether this is material or pervasive. Number 2, we have to see whether this is a material or pervasive. Right. So you have to see whether this is material or pervasive. Pervasive. Material or pervasive. So now to see that this is material, why? 90 million is above the 15 million material level which is given in the question. So therefore this is material, yes. Is it pervasive? No, it is not pervasive. Can you remember the pervasive example that I gave in the reporting webinars? I told to you to go to the goal phase. Now of course a different scenario. If you go to the goal phase and if you look at the sea, how large the sea. It's a severe impact to the finance statement. It may be effect into the many item of the finance statement, or it may be one item impact but it represents a substantial portion, or it is something fundamental. All three criteria of the pervasiveness is not satisfied. All three criteria of the pervasiveness is not satisfied. So therefore this is material but not pervasive. Then if there is a misstatement, it is not material, it is material but not pervasive. What the audit opinion we have to give is qualified audit opinion will have to be given, that is except the particular inventory valuation, all other aspects do present fairly in all material respect, right? So that is the answer. If you go to the answer given here, very simple, the audit opinion should be modified due to the following. Due to the disagreement with the management, no adjustment has been made in the finance statement for the impairment of gin stock. The value of this adjustment is above the above materiality 15 million, and as such it would be a material misstatement. However, this write-off is not pervasive as the material misstatement is confined to specific areas of the financial statement. The auditor will therefore issue except for qualified opinion. The auditor's report should include a paragraph headed as basis for qualified opinion describing the matter giving rise to the modification. Alright, that is being a very large case scenario, but we discussed in a different approach. What I want to tell you is now the student who faced the exam, if someone watched this video, if you have faced the previous exam but you got fail, you understand this reason. The large case is the reason for you to get fail at the exam. Not that you don't know the answers, you know the answers. The problem is the quantity of information is very large, you cannot absorb into the mind within given short time at the exam. No way out for that. You have to minimum do 10 this type of questions, then you will figure out that how to approach. Doesn't matter what quantity the quantity of the question is, but it is the quality of the information that is given in the exam paper. Even though 2 pages are there, 50% of the informations are not relevant. You could have realized now. You should have realized. 50% of the informations are not relevant. So therefore you need to have a peaceful mind or a logically analytical mind and good practice of this question to figure out what are the critical information which are given in the case for the required part and what are the information, other information which is for just for your information. So that is only way out is practicing 10 questions. So I am requesting you again redo this question and try to do the way I thought, the way I approach. It will help you to get into an answer without getting scared at the examination. So this is question number 7, not like question number 6. Question number 7 is not that difficult. So generally if you look at all the past papers, question number 7 is not difficult, right? So question number 7, so first look at the required part quickly. Right. So the required part, so there are 4 or 5 parts of the question, but not difficult. So the outline the procedure that the audit team should perform when evaluating the work of auditors expert for 3 marks. Please follow the steps. You have to read 3 times and highlight the action verb. Those you have to do, but I am skipping those steps now for time constraint. And prepare the most appropriate substantive testing procedure for the borrowing cost capitalized during the year for 5 marks. Assess the impact of the opening balances audited by the predecessor auditor on the audit report of the Beta and Company for 6 marks. Considering the impact of the lawsuit, explain the basis of the inclusion of the paragraph of the audit report for the year ended 31st March 2021 for 3 marks. And then final question is coming into, final question is, as requested in D, prepare the paragraph to be included in the audit report for the year ended 31st March 2021, 3 mark. Actually this is not a difficult, and even 20 out of 20 can be taken. How to get the 20 out of 20? I'll read the question to address the particular incident. Now there are certain incident given, but we'll go by one by incident. The first incident is a work of expert, second one is from the borrowing cost, third one is opening balance, fourth one is a legal case. There are 4 cases given. For the 4 questions, 5 questions are from the 4 cases given. So therefore first we will read the first case with regard to the auditor's expert. Right. Auditor's expert. Question number 7, we'll read. Sigma Private Limited, this is a private limited, so the private limited or PLC, a critical information, is a manufacturing company involved in the solid rubber tires. They are the business nature is, they are in the rubber business. Get into a mind that you are auditing a rubber tire manufacturing company, maybe like SEAT, maybe Apidac. So likewise there are so many tire companies, DSI. Sigma operates, is a private limited, operates in 2 factories. In one is the natural rubber and the other one is a recycled rubber. However, due to the lack of recycled rubber and the defective plan, the performance of the solid tire factory that uses the recycled rubber was not satisfactory. Sigma's control environment is assessed to be strong. Sigma's control environment is to be assessed to be strong, and the finance function is led by a qualified and experienced chartered accountant. So control environment is good and the chartered accountant is there, and he is supported by another chartered accountant and partly qualified accountant. There are 2 chartered accountant plus partly qualified accountant. You are the engagement manager of the Beta and Co, responsible for the audit of Sigma's financial performance. For the year ended 31st March 2021 is the critical information of the year ending, and you are reviewing the progress of the following areas in the audit. So now, and you are on progress of the audit. So let's look at this auditor's expert matter, right? Auditor's expert. So based on the indication of impairment, the management had performed an impairment assessment. So impairment assessment, an impairment provision of rupees 25 million was recognized in the finance statement for the year ended 31st March 2021. The impairment assessment involved various assumption, calculations and judgments. Beta and Co decided to obtain the services from an expert to review the impairment assessment performed by the Sigma management team. Accordingly, an auditor's expert was identified after assessing the independence, competence and experience of the expert. Beta and can also enter into a contract with the expert to agree on the scope of work and fees and to use the external expert work as the audit evidence. As agrees, the auditor's expert performed the agreed scope of work and provided a report to the Beta and Company and audit team. on behalf of impairment computation, audit has used the one of the expert. Right. What has happened now? So management of the company. So they prepare the financial statement and give it to the shareholders, but the shareholders do not trust the management, so therefore shareholder comes and appoint a third party person called auditor to check this financial statement. In doing that, what has happened under this management? So there is an impairment. If you look at the indication for impairment, impairment is there, and 25 million has been recognized as an impairment, right? So now 25 million has been recognized as an impairment. You know, impairment is coming for the property, plant and equipment, and it is a difficult thing to assess. You know, impairment is assessed as per statistics, that recoverable value and carrying value is compared with the recoverable value. The recoverable value is assessed, fair value less cost to sell law, value in use. So based on these mechanisms only you have to calculate the impairment. Impairment cannot be done the you and me. You are also finance professional, I am also finance professional, I am auditor. We can't do that, because impairment now, for example, the tire manufacturing company, there is a machine, the how many years that machine could be used depends on the assessment of the expert, factory managers, production managers. How many quantities can be produced this machine is not within our scope. So therefore, management has done the 25 million impairment assessment. Auditor himself is not in a position to verify this. Auditor unable to do that. So therefore, what happened? Since auditor is unable to do, auditor goes to a third party person called expert. Auditor goes to an expert and say that look here expert, that I am auditing this particular company, they have done an impairment of 25 million, but I am not in a position to verify it. Can you go and verify and to see the reasonableness and give me a report? Give me a report. So that means the expert has to give the report to the auditor. That is auditor's expert. Even we only employ an expert, since we don't know, to get the support of an expert in arriving or coming to a conclusion that whether the impairment is sufficient or the impairment is reasonable. So in doing that, this auditor has to do certain works, and auditor has to do a certain works. That work that need to be done is very clearly given in the standard SLA US 620. Using the auditor's expert, they are giving certain steps to be done. So you have to evaluate the expert competence, capabilities and all that. We have to evaluate that trust, and then we have to go into a contract or an agreement with them. And the third thing, we have to evaluate the work that is done by them. And the fourth one is a reporting. These are the four requirements given in the standard and very clearly given in the study text as well. So now, out of that four step, the number 1, 2, number 3, number 4, four requirements. The third requirement is evaluating the works. So evaluating the works that is done by the expert is the third requirement. That is your examination question. If you look at the exam question, part A is asking, outline the auditor's procedures, outline the procedure the audit team should perform when evaluating the work of auditor's expert. When evaluating the auditor's work of expert, what you need to do is the third step. The first one is the evaluating the competence and capabilities. Second one is enter into an agreement. Third one, evaluating the works. And fourth one is reporting. So when you are evaluating the works, what the audit team should do. When I am evaluating the work of this auditor's expert, when I am evaluating the expert work, what I need to do? I need to evaluate the reasonableness, right? Reasonableness of the work that he performed. I am not an expert to calculate those things. If I am expert, I should have done, why I should undertake another person. But I have to evaluate the reasonableness of the expert work. Second, I have to evaluate the reasonableness of the assumption that T used. And I have to, third one, I have to look at the accuracy and the reasonableness of the source data that you used. I have to look at the reasonableness and appropriateness of the work that he has done, and what are the assumptions he has made, whether those are reasonable. And the third aspect is with the source data, they might have used different data, whether those data is accurate or not. So that must be seen. So that is the answer for the evaluating this thing. So if you go to the answer script, that is the answer given by the examiner. Question number 7, you can see relevance and reasonableness of the expert work and the consistency with other audit evidence obtained by the auditor. Consistency with other audit evidence. Relevance and when you are writing, actually this both must be there, right? Reasonableness of the auditor's expert and consistency with the other audit evidence, that is mandatory. Second, relevance and reasonableness of any assumption and method used by the expert in testing the impairment testing. And relevance, completeness and accuracy of the source data which are being used. Right, question number 2, prepare most appropriate substantive testing procedure for the borrowing cost capitalized during the period. We will come to the borrowing cost scenario now. What is the borrowing cost scenario here? Borrowing cost scenario. So during the financial year ended 31st March 2021, during the financial year ended 31st 2021, Sigma had to obtain two loans to finance its expansion activities. The construction was in progress as of 31st March 2021. On behalf of their expansion construction activities, they have obtained two bank loans, and the construction was going on 31st March 2021. The audit working papers included the following. The borrowing costs are capitalized as part of the building that is being constructed. The interest amount capitalized for the year end is material to the finance statement as it is above the materiality threshold set by the auditor. Right. Then the audit team had tested the control over the capitalization process and no exceptions have been noted. Further, the risk of material misstatement related to the capitalization of assets including borrowing cost is assessed to be normal. Sigma has obtained these loans from a reputed bank. The capital borrowed was rupees 300 million and a grace period of 1 year was granted before repayment of the loans. As such, there was no changes in the capital outstanding during the financial year ended 31st March 2021. Due to the lower risk, engagement team agreed to only perform the minimum required substantive procedures in testing borrowing costs capitalized as at 31st March 2021. What is the story? Alright, we'll go to another page. The story is, now again our basic diagram. So management prepare the financial statement and give it to the shareholders. Shareholders do not trust the management, so therefore auditor is appointed to come and check. This is our fundamental auditing principle. Right? In what has happened in this scenario, so this particular company, I'll take it to here. So this company has obtained some loans, right? And the loans will have to be paid interest. This interest can be capitalized. Interest can be capitalized if such interest is incurred for qualifying assets. If it is incurred for a qualifying asset, right? So it can be capitalized. What is meant by qualified asset? Qualifying mean now that particular asset should take a substantial time to get ready for the intended use, right? And if this loan has been obtained, that loan finance has been loan money obtained has been used for the constructing of a qualifying asset, particular interest charge can be capitalized as per the borrowing cost LKS 23 standard. It can be done. Right? I used to tell previously that when you are doing the CL1 examination paper, you have to have a knowledge of certain accounting standard, list of accounting standard I gave previously of a webinar. So I hope that you can remember it, right? So now can be capitalized as per LKS 23. Now the problem is, now auditor is going to verify this. Okay, that is accounting requirement. Now our man is coming in to verify this, right? When you come to verify this, so first of all what you have done is control assessment. Control assessment is good. So that means the controls in relation to transaction capitalization of all this process is good. Internal control environment also good, control activity is also good. So therefore control risk is low, CRA is low. Control risk is low. When the control risk also low and a lot of controls are there in the business organization, you don't have to go and verify further substantive procedures. That's audit approach. We call combined audit approach. Can you remember? Combined audit approach. We do test of control plus limited substantive. Can you remember? There are two auditing approach. One is to perform the fully substantive. Other one is test fully substantive. Other one is a combined approach. So where you perform the test of control plus limited substantive. In this particular case also, since the control assessment is good, you don't have to go for a detailed substantive, but you can conclude this with limited substantive. Limited substantive. Now the question is, this limited substantive mean what? And what are the procedures that you can do as a limited substantive? If you can remember the logics of the audit planning, the limited substantive number one is what? Number one is ARP. You don't have to go a detailed calculation, but you can perform the reasonableness calculation, reasonableness of the interest calculation by performing the analytical review procedures as per the standard number 500. Right, 520. So analytical procedures could be perform it. So that is the main one. Now the question is asking about what are the procedures can be performed. Prepare a most appropriate substantive testing procedure for the borrowing cost capitalized during the period. So what the most substantive testing is the analytical review procedure, right? And going beyond another steps, so you can do a reasonableness calculation of interest, how it can be done. So it says that they have obtained two loans, but these two particular loans have not been started repaying the capital because there was a grace period given. So then if you just apply loan amount into interest percentage and multiply into the time period, you will get directly the total interest cost. Right? That is a reasonable calculation. So you can do the analytical rule procedures, you can do a reasonableness calculation of interest loan into multiply into the interest rate. Right? The third one, another one we have to see now, but we have to see whether this is a qualifying asset or not. We have to see whether this is a qualifying asset or not. If it is not a qualifying asset, then you can't capitalize it. Right? That is the answer. Now what the examiner has expected from you to test this logic. When the control is good of a company, you don't have to go and do a detailed verification substantive procedures which we learn as a basics of auditing. Limited substantive should be performed. So that the expected answer at the examination. If you just read the answer, just read the answer for part B. So in terms of LKS 23, an entity shall capitalize borrowing cost that are directly attributable to the acquisition, construction or production of a qualifying asset as part of the cost of the asset. This audit team may perform substantive analytical procedures by way of reasonableness calculation of the amount of interest capitalized. Since there has been no movement in the loan balance, it can be easily calculated by the engagement team by applying the interest rate per the loan agreement. The loan balance can also be verified against the confirmation received to ensure that there has been no change to the capital amount obtained as it is still in the grace period. A calculation of the interest can also be done. Re-perform on the interest calculation. So any variance arising should be assessed by the engagement team to determine whether there is a material misstatement or not. If the variance is significant, it should be further investigated by the auditor. If there is a variance, you have to go into that further detail too and see whether why it happened, right? So that is the answer. Right, I am going to the next question now. Part C, assess the impact of the opening balances audited by the predecessor auditor on the audit report of the Beta and Company for 6 marks. Again, it's one of the easiest question for a part C. Opening balance, we will read this one. This is the opening balance story. Right, opening balance. Beta and Company is performing the audit for the first time as the ownership of Sigma had changed last year and the new owners had appointed Beta and Company. Beta and Company is a newly appointed. The audit team had visited the predecessor auditor to verify the opening balances to review the audit working papers of the previous audit. The audit team had not noted that sufficient audit procedures had been carried out. An unmodified opinion on the finance statement of the previous year had been issued. So this is another good story, right? So we'll go to the basic explanations, basic diagram. So management of the company, so they prepare the financial statement and given to the shareholders. I am requesting all students, whenever you analyze the auditing case, draw this diagram. This will give you a logical understanding into the auditing principle. Now this is Beta and Company. So the first year audit, right? And let's see, this audit has been done in the previous year. Let's say X audit firm. Now what the Beta has done is, now Beta is going to check the working papers of the previous year. The Beta is going to meet the previous year audit and understand whether what has happened to the opening balances, whether the proper audit procedures has been carried out, whether sufficient and appropriate audit evidences are available. All this Beta will go and check at the previous year audit firm. Why? Because this is a initial audit. Right, as per SLA US 510. So when you are presenting the current year financial statement, so let's say 2022 financial statement when you are presenting, 2021 also you have to give the financial statement figures. So therefore, this particular auditor has a duty or the responsibility to satisfy the 2021 balances as well, because 2021 balances have come as the opening balance to the 2022. Therefore, the Beta and Company new audit firm has a duty to satisfy themselves on the opening balances of the previous year. In order to satisfy the previous year figures, there are so many procedures that this particular new audit firm can do. One of them is they can visit the previous year auditor and check their working papers. They have already done it, so they have complied now. They have complied and they have a satisfaction over the opening balances which have been brought forward here. Now the question is, question is, assess the impact of the opening balances audited by the predecessor auditor on the audit report of Beta and Company. Impact to the audit report. What the impact to the audit report of Beta Company? Right. Obviously, you might have learned under the reporting. Now, see like this. When the previous year audit was done by another auditor, and it is something which is related to the audited scope and auditor's responsibility. In that case, a Beta and Company new auditor thinks that I should communicate to the shareholders that I was not the previous year auditor, even though the previous year figures are presented in this financial statement. That is not an audit qualification or a modification, but just giving additional fact, emphasizing something to the shareholder. Therefore, when the previous year audit was done by another auditor, basically we give a what? We give a other matter paragraph. We give other matter paragraph and stating that the previous year audit was done by another auditor. That is one of the reporting impact of this particular scenario which we discuss now. The second thing, this auditor should understand that, right? Auditor should understand that auditor has already gone and checked the sufficient and appropriate audit evidences on the previous year figures. That is satisfied. But still, the auditor has a responsibility of 2021 figures as well, because those are brought forward as opening balances in our financial statement. Just because of satisfying the opening balances verification, that means the evidences that are gathered by the previous auditor, that doesn't mean that these two things will be fulfilled with that. One is we need to ensure that balances are brought forward. Balances are brought forward, right? Balances are brought forward properly. That will not ensure just because of we check the previous year auditing account papers. Auditor has to ensure that the previous year closing figure which is presented in the finance statement has been correctly put to the current year opening balances. That must be ensured, right? And secondly, accounting policies. So now auditor must ensure that the accounting policies of the company has consistently been applied. If the depreciation is made on a reducing balance method, the accounting policy should be in line with the consistently applied with the previous year. If there is a change, it has to be dealt with the LK side accounting policy changes. So therefore, what is the impact of this particular scenario given to the auditors or auditors' impact? Auditor has to do two things. The balances brought forward are correct and the accounting policy application in addition to the working paper review at the other auditor. Then auditor has to put a other matter paragraph. Right, if you look at the answer for this one, since the finance statement of Sigma for the year ended 31st March 2021 include correspondence figures which were not audited by the current auditor, it will be brought to the user's attention. This is presented in the other matter paragraph in the auditor's report, as it is not a matter that is disclosed in the financial statement. As discussed above, the auditor considered it is necessary to draw the reader's attention to what is relevant for their understanding the audit. Then it says, in the current year, the auditor should ensure consistency of the accounting policies adapted in the two periods and also whether the previous year's closing balances are correctly brought forward as opening balances in the current period. If the auditor concludes that the current period accounting policies are not consistently applied in relation to opening balances or changes have not been properly accounted and adequately presented and disclosed, the auditor shall express a qualified opinion or an adverse opinion. Accordingly, the auditor can state that the finance statement for the year ended 31st March 2020 were audited by another auditor and previous auditor has issued an unmodified audit opinion. Now when you are writing, it is better to write in a bullet point form, and always you need to remember that you can't just write, because you should have an understanding into this is a 6 marks. Number of mark understanding must be there, then only you can link into the quantity of the answer at the exam. We are coming to the last one, part D, one before the last. Considering the impact of the lawsuit, explain the basics for the inclusion of the paragraph in the audit report for the year ended 31st March 2021 for 3 marks. So let's read it out, that what is that story? Lawsuit. So during the year, a customer of Sigma had initiated a litigation claiming rupees 1 billion. Claiming customer has taken a legal action asking 1 billion for the loss of profit, charging that Sigma did not supply orders for tires with the required quality. So one customer has taken a legal action demanding 1 billion because of the non-supply of the goods on time with the required quality. The court had been closed due to COVID-19 and the case had only been heard once. As such, the outcome of the lawsuit is uncertain. Outcome is uncertain as at the balance sheet date of 31st March 2021. This has been disclosed in the financial statement for the year ended 31st March 2021, and you are of the view that the disclosure made is adequate. So they have disclosed as a contingent liability and the disclosure is adequate. Contingent liability, disclosure is adequate. Nonetheless, you are of the view that given the potential size of the claim of the lawsuit, it is fundamentally important to a user's understanding of the financial statements. Now, you know, when you look at the past papers of the last 10 years, past papers of auditing, each and every past paper you can see this lawsuit is there. Legal case, somewhere it is there, risk assessment or somewhere. So therefore, you always need to look at the past papers and analyze the pattern of questions. And because there are certain things which will have to be tested and which are part and parcel of the external auditor. Now this information what is given here actually in our practical audit firm, what we apply. What we commonly apply, commonly being tested. So lawsuit is another example. So how many questions we discussed on this in a previous sessions or previous webinars. So now here is the cases, there is a 1 billion legal case and the court hearing is going on at the year end. Court has not been contoured this matter and they have disclosed as a contingent liability as per case 37, that is perfectly alright, correct, perfectly correct. What they have done is correct. What they are asking from us now, what they are asking from us is, considering the impact of the lawsuit, explain the basic for the inclusion of the paragraph in the auditor's report. Whether we need to put a paragraph here, obviously yes. If there is something fundamental, in the financial statement which auditor believes, and that also already presented in the financial, something fundamental and it is already presented in the financial statement, right? And also it is not a misstatement, it's not a material misstatement or a material scope limitation. If it is, I gave you a 5-step model. If it is not a material misstatement or a material scope limitation, it is something fundamental and it is something which is related to the already presented in the finance statement. If all three are satisfied, so we give something called emphasis of matter. We go something called emphasis of matter. Can you remember? SLIUS 706. So in this case now, you can think, in this case, because of all three factors are satisfied, what I explained, the emphasis of matter should be given. That emphasis of matter, again I am telling, it is not a material misstatement or a material scope limitation where you need a modification. It is something fundamental to the user and something which is already presented in the finance statement. So therefore it is comply the criterias of the emphasis of matter paragraph, right? So when you look at that, so part D, considering the impact of the lawsuit, explain the basis for the inclusion of the paragraph of the audit report for the year ended 31st March 2021. And if you go to the answer, D, since there is no misstatement with respect to the lawsuit and adequate disclosures has been made in the finances, audit report does not need modified. And however, it is such important that it is fundamental to the user's understanding of the finance statement. Therefore, this need to be brought to the attention of the users of the finance statement. Through the emphasis of matter paragraph, you can draw users' attention to this matter by referring to the not provided to the finance statement. Right, we come to the last question now. Last question. As requested in D, above prepare the paragraph to be included in the audit report for the year ended 31st March 2021. Very simple question, where it says that when the emphasis of matter paragraph is given, what the wording? It is very clearly given in the study deck. We say that we draw your attention to note number X, which explains the legal case that has been filed against the company and related outcome. We do not modify our opinion. We have not modified our opinion in this matter, on this matter. That's it. So it was very simple question actually. So we drew attention to note text in the finance statement which describe the lawsuit against the company and its possible effect of the company. Our opinion is not modified. So that must be there in your answer, right? Our opinion is not modified in this matter, on this matter. So that is the answer. Right? With that we right. So with that we finish the examination paper, the fully. So I just want to pass you a few messages on the paper, right. Right. Now, so we have done the fully paper, it will take a little longer time. Remember, this is the one of the most difficult examination papers in the recent past. You may be a student who is doing the auditing paper this time in July 2022 as first time, or you may be a student who has done already the examination in the previous attempt and you got failed. So don't worry. So now you would have realized, even if it is a difficult examination paper comes in, how to approach. Approaching the examination questions are very much important to maintain the confidence throughout that 3 hours and logically develop an answer and write at the examination. That is more crucial. So therefore, I am requesting all the students, keep that confidence, look at without just looking at the theory, please do questions as much as possible. 50% of your timing should be devoted to write more and more questions. When you write more and more questions, you will figure out the theory, the logic behind the theory, and then you will get an approach that in your approach, how to develop a logical answer without getting panic, without getting scared at the examination during that 3 hours. Irrespective of all the difficulties and given current circumstances, we don't have any other solution other than we get qualified and move forward in our life. Then only you can do something to you, something to your family, and something to entire society, something back to your country, back to our country. Right, so therefore I'm requesting all the students, irrespective of the current issues going through in the country, so focus on your studies and somehow get qualified as early as possible. That is the most priority in your life. Thank you very much.